How are you thinking about tackling inflation, but also some concerns about a recession on the horizon?
Well, I will get right to that, but first let me just underscore what the president talked about today out in Ohio. Promise made, promise kept. Those of us who've paid attention to the issue of multi-employer pensions and some of the solvency issues they've faced, where literally millions of workers were at risk of losing their pensions through fund insolvency, have been dealt tremendous relief today. So I hope we get a chance to talk about that. I think the points that you're making on the labor market are particularly germane right now. You have a JOLTS employment number that came in well over 11 million in terms of vacancies. Of course, the unemployment rate, at least for May, still very low. We'll get June numbers later this week. We simply have a very strong unemployment situation, a very strong labor market that's continuing to fuel consumer spending, keeping the economy moving forward. Yes, real constraints out there on the supply side, obviously elevated inflation, but it is a more nuanced picture, I'd say, than just citing an inflation number.
Going back to, of course, the work on pensions investments, trying to make it easier for pension investments to receive a higher rate of return, trying to ensure that people are made whole in what the pensions they thought they would receive. Individuals retiring in 2017, realizing that pension could be cut. Jared, I want to talk right now about those that are facing retirement right here, right now, worried about their pension pots, worrying how much, due to financial conditions, they suddenly are slumping, worried whether they should be in cash and not in the stock market. People already feel there's a recession, even if there isn't one technically. How are you speaking to those people right now?
Well, let me talk about a couple of different groups here. Now, first of all, and just because today such an important announcement, it's actually part of the American Rescue Plan, this financial assistance program. You've got a couple of million people who really do fit the category you're talking about, in that their retirement security was very much compromised until the president signed this measure. And now they will get full benefits, even if they weren't getting them before. That is, even if they've been retired, they'll be made whole. Now, if you want to talk about the broader public, one thing to keep in mind, and it's a very unique, again, it's getting under the hood. This is something that probably is underreported. If you actually look at the net worth of American households, it is highly elevated. If you look at the debt service, which of course makes sense because net worth is going to be assets minus liabilities, debt service historically very low. Now, I am by no means saying that there aren't people out there struggling with retirement security, but let's not conflate what's been going in the stock market with years of positive returns and this elevated level of net worth.
Well, but with that elevated level of net worth, I mean, let's kind of break that down, I guess, Jared, into some sections here. We know a lot of that elevation has sort of been weighted towards a certain class of people here. Are you, I guess, confident, or do you have some sort of, I guess, encouragement here that maybe the distribution of those wealth gains have been equitable enough? And if not, what can be done about it?
Yeah, great question. So when we talk about these numbers from the Federal Reserve flow of funds, we're obviously talking about aggregates. And if you look at the abundance of excess savings, the net worth, the debt service numbers I've cited, those are all aggregates. We know that net worth is highly concentrated at the top of the scale. But we also know that there are some pretty equitable components of this recovery that, again, I think have been underappreciated. Some of the strongest wage gains have been at the bottom of the scale. If you actually want to look at sectors where wages are beating inflation, tends to be leisure, hospitality, some transportation, some warehousing, lots of low-income workers there. The black unemployment rate still unacceptably high. It took 5 years to get back to its pre-pandemic, to its pre-recession level in past recoveries. In this case, it took 1 year. So there are some underlying equitable results that I think have been overlooked. But on the net worth side, you're right. That's highly concentrated. By the way, it's one of the reasons why Social Security is so important, something President Biden talked about today in his speech.
What do you make, though, of the cure for high prices is high prices, and some of the Federal Reserve coming out and saying that they have to raise rates because they're worried about inflation, how that impacts some of those lower-end workers that had been making such progress, but in the face of inflation, a lot of that still is being wiped out?
Well, I don't really think that wiped out is certainly a word that we have anything like evidence for yet. We still have a very strong labor market. You know, we just got the jolts, over 11 million vacancies, so that's historically high. Quit rates ticked up a touch, but they are still historically high. I think that, you know, I think you have to put that in perspective. Look, we're not going to talk about granular Federal Reserve policy. We don't get into that kind of knitting, but if you look at the history of presidents and Federal Reserves, and there's a couple of great books about that out right now. One is by Ben Bernanke, one is by Jeff Gartner. So these books have just pages of presidents harassing Fed chairs, particularly in rate hiking cycles, and it always ends very badly. In fact, I would say the history of the world is littered with economies that have been brought to their knees by that kind of interference. This is a president who has very much approved of what the Fed is doing, who has said, we understand that this tightening cycle is important. You are the first and foremost fighter against inflation, so we're very supportive of what they're doing.